Here's a number to chew on. The average American household with unpaid credit card balances carries about $7,300 in debt, according to LendingTree.com. A single Federal Reserve rate change can swing how much families pay in interest every month. That's why today's move matters. The Fed cut its key rate by a quarter point down to 4% from 4.25%, the first reduction in over 2 years.
In support of our goals and in light of the shift in the balance of risks, today the Federal Open Market Committee decided to lower our policy interest rate by a quarter percentage point. We also decided to continue to reduce our securities holdings.
Markets immediately began betting on whether this is just the beginning. Officials left the door open to more cuts before year's end if inflation cools and the job market keeps slowing. Chair Jerome Powell said additional moves are a probability. Some may argue it's overdue relief for borrowers. Mortgages, auto loans, and credit cards all hinge on the Fed's rate. With hiring cooling and wages leveling off, they see cheaper credit as a way to prevent layoffs. Others, however, might warn the Fed may be moving too quickly. Inflation, while lower than 2022 peaks, is still running above target. Easing too fast could let prices climb again and weaken the dollar, they worry. Some dissenting Fed officials voted against the cut, citing those risks. One side note, Bitcoin jumped as traders bet looser policy will push more money into risk assets. Analysts are debating whether this is a breakout or a trap. We're joined now in studio by economist and policy advisor at the Heartland Institute, Darren Nelson. So good to have you back.
Thank you. It's good to be back. Actually, it's been a few years.
It's been a second. Give us some context about what all this means. There's obviously these two divides. One says this is really bad and this is really good. Where do you fall?
Bit of both, actually. I think it's the right time for rate cuts. I'd probably make the same argument. I don't think any economist has quite made this argument. I'm going to link it back to this article I wrote for the Daily Caller about tariffs, right? Mm-hmm. Just wait for where I'm going with this. In that one, I think I was the first person, weirdly enough, on the planet to argue that, interestingly enough, the Trump tariff strategy that he had in the executive order, mm-hmm. the three main reasons that they had for the tariffs were the exact same reasons that Adam Smith, the godfather of free trade economics, yes. put forward in 1776, the reasons you might actually mm-hmm. use tariffs. Defense, and the other two are kind of a bit of art of the deal, basically mixed together. One's kind of just reciprocating with, similar tariffs to your... The other one was like, look, these people are really hurting us. Let's hit them with something really hard mm-hmm. to get them to the negotiation table to then, cut tariffs eventually, we hope. China and many other countries use interest rates and ultimately the money supply yes. as part of, kind of the same sort of strategy to supposedly help themselves and, vis-a-vis, say, the United States as their trading partner. Mm-hmm. So, the interest rates in our trading rivals like the European Union, China, Canada, the UK, Australia, for instance, mm-hmm. are all quite a bit lower and have been for some time. I think Trump was making those sort of arguments that, look, other countries have been lowering rates.
Right. It was a correction argument, right? He is, at his core, a free market guy. This is not a guy who's going to say, we're going to shut down the markets and not actually engage. That's not Trump at all. But some people seem to have misinterpreted his latest moves, it seems like. But yes, you make a great point. And to your argument, none of the doomsday predictions that traditional economists made came to be.
Yeah. Well, look, I mean, here's the situation that's very different from the Biden administration. The Biden administration, which we saw that, I got into double-digit CPI figures, mm-hmm. which is the main way that people refer to the measure of inflation. Actual inflation tends to be actually bigger than that, but anyway.
Because they never count food.
Yeah, they take a lot of stuff out. Right. Ultimately, you kind of have to look at the money supply to get a bit better feel. Okay. They have these technical measures, M0, M1, and M2. M0 is just like currency. M1 starts to include transaction bank accounts, mm-hmm. And then M2 starts to throw in savings accounts and all that sort of stuff. So, so they're money type things, right? You can turn them all into money, use your debit card, or they also, help pay for your credit cards. So what was very different, obviously, I mean, it's completely different, but one thing that was different was, and they're referring to these soft, employment figures, which I don't think that's actually the case. I looked at the same figures, and they're not strong yet because it's only been just over 6 months of the administration. I believe they're going to take off, but they're not soft and they're not decreasing. And what's happened is they've stayed kind of relatively flat because of all the cuts to the bureaucracy in the federal government.
Oh, really? So you think that really has created that much of an impact?
Yeah, but it's also been offset by the private sector starting to take off, private sector employment. And we're seeing the same thing with GDP figures, where they go, oh, the GDP figures aren't all that great yet. Well, yeah, because government is part of the GDP. Now, a lot of economists argue they shouldn't include it, but they do, right? So basically, they're decreasing the size of government. Next year, they're going to really decrease the size of government, but we won't notice it in terms of GDP and employment as much because I think by that stage, the private sector would have taken off. So why we're not going to see anything like Biden's inflation is his economy was stagnant or worse. All he was doing was growing the size of government itself, right? And eventually that shows up. You just can't hide it.
And not only did we have inflation from a daily point of view, but we also had job inflation numbers, which is part of what that ding seemed to be from last month. The job numbers that came in, huge scandal. MSNBC was losing their minds over it, and it turns out that no one really wanted to highlight the fact that a lot of those had been inflated under the Biden administration. Yeah, look, I know some people who actually work in BLS. They don't think that they intentionally tried to rig the numbers, but the fact is they've been getting the numbers wrong for quite some time. You remember? I think Why? That's a good question. I was trying to get to the bottom of this. They need a shakeup. For whatever reason, the BLS, at least when it comes to employment figures, and these are completely different people than put out some of the other numbers in the BLS, they've just been notoriously bad for And of course, it's the Bureau of Labor and Statistics. This is the bureau that is in charge of keeping track of these numbers. Yeah,
I mean, they split some of the numbers with the Bureau of Economic Analysis as well, who put out some statistics, and the census also. So it gets a little bit confusing when you got three statistical organizations.
Well, no wonder they messed it up.
Well, the BLS, so remember it might have been 2 years ago where they got the figures wrong by about 1 million. Remember that?
Yes.
I mean, look, I've lived half my life in Australia and I've worked in other English-speaking countries. Their statistical organizations never botch up to this extent. Be interesting to see why. I don't know as of yet. But the upshot is I'm suspicious of BLS, not so much because they're being political, although that's certainly a possibility. I think the person that Trump fired recently was known as a well-known sort of Democrat, but...
Well, give us a prediction of where we will be by Christmas. I mean, do you see that we're just going to continue to balance out all the damage that was rendered by the Biden administration by Christmas, or are we going to start seeing some noticeable changes on the day-to-day?
I think we're going to see notable changes. I think just even going by the first Trump administration, and I think this Trump administration has got, because obviously Trump has now been around the D.C. block, and he's hired much better people than he did first time. I think he even admitted he didn't quite understand how much of a swamp the swamp was.
Right.
Yeah, so I think, bare minimum, we're going to get sort of it took about a year for things to really kick off in the first Trump administration to start to see, the GDP figures and good inflation figures and good employment figures. I think we're definitely going to see that. Bare minimum, we'll see that kind of equivalent. So, instead of, sort of 2% type growth, we're going to see something closer to 3%, because throughout most of his administration, we saw greater than 3% growth, right? I think, coming into next year, I think, 4%, and certainly by the end of the administration, don't be surprised if you start seeing something like 5 or 6%. And our figures will be, putting aside, hopefully BLS will be putting out much better figures, and it'll certainly much be better than the Communist Party in China puts out, right?
Well, this is actually not even taking into account, whatever might come of our meeting with China. It looks like there's a lot of moves on both sides. They want to resolve whatever trade issues we have at the moment, and they are big issues. Yeah. But it seems like there's a lot of momentum to resolve it, to be at least economically friendly again. So that will even be an outlier. That could be huge in the outcome.
Yeah, I think we'll find a better balance between, if you like, being, certainly more pro-American business, but also in a way that doesn't, people do like some of those cheap Chinese products as
Right.
consumers. We'll find a better balance, I think. And even, Amazon, who is almost literally the retailer of communist China, they've been kind of diversifying. Sadly, maybe not as much into the U.S., but at least they're into like countries that are a little bit more friendly to us,
Right.
and certainly not like, communist China is well documented. Their kind of plan to basically not only take out the U.S., but kind of dominate the Western world. So, when you're dealing with China, you're not doing a free trade agreement with Canada, even as difficult as that could be, under the previous prime minister.
Right.
We're dealing, because most big businesses, and maybe going even further down in China, they're not like dealing with private sector businesses. They're all either official state businesses or they're unofficial state businesses of China. So it's a very different beast that you're dealing with.
Yes, and that beast is operating in the United States too, in very interesting ways.
And not obeying the rules here and all that sort of stuff.
Exactly. Darren Nelson, that's all the time we have for the show. Thank you for closing us out. Thank you so much for the time.
Thank you for having me.
That is all the time we have. Remember to download the OAN Live app on your TV and your favorite streaming devices. You can also catch any Fine Point episodes you may have missed right there in the app with our video on demand feature. You can also save Fine Point episodes to your library on YouTube TV. Make sure to do that if you have it. And I'll add this. I won't be here in the chair for tomorrow night's show. Instead, we have a very special program. We'll be airing the Charlie Kirk Vigil in the Fine Point Hour, so please tune in for that. It's going to be a good one. I'll leave you with this. One machine can do the work of 50 ordinary men. No machine can do the work of one extraordinary man. Good night. Godspeed. I'll see you next week.